So again, more in the camp of transitory inflation. This is something that we had taken a view on over at Fundstrat, that we'd expected stocks to rally post-Fed. And we see that indeed there was good follow through in both the NASDAQ and small caps, which outperformed the S&P. The NASDAQ up 1% in the 24 hours after the Fed announced this cut, and small caps up 2.5%. Now you might wonder, will stocks continue to gain? And the answer in our view is yes.
Tom Lee sets the stage with a clear connection between monetary policy and equity performance. When the Federal Reserve eases, cash is pushed off the sidelines and risk assets benefit. His framework places AI front and center in this dynamic, not just as a trend, but as a structural shift in how capital flows into the market. In his mind, the environment created by dovish policy changes is the perfect catalyst for companies driving the next era of technological transformation.
But I think the way to think of it is to think about NVIDIA, which happens to be a granny shop. But as you can see, NVIDIA's PE is 26.6 times. Now, do I think that's expensive? I don't. First of all, as you can see on this chart, it's in the middle of its range over the last 5 years. But keep in mind, Costco and Walmart trade at 48 times and 34 times earnings. These are far less scarce and unique than NVIDIA. NVIDIA is the most scarce company in the world today because they make a chip that every AI company needs. So until NVIDIA trades at the same multiple as Costco, I think NVIDIA is not in a bubble.
Here, Lee emphasizes scarcity. While most companies compete in crowded spaces, NVIDIA is in a category of its own. Every major AI initiative relies on its chips, making it the single bottleneck supplier for a trillion-dollar revolution. When viewed against consumer staples that trade at higher multiples, NVIDIA looks less like a bubble and more like an undervalued gatekeeper to the future.
Well, in 1998, September 98, Cisco was at $16 and 55 times forward earnings. Why am I setting September 1998? Well, that's similar to 2025. The Fed was on an extended pause and then they cut in September. In the following 12 months, NVIDIA went to $80 per share and its PE went to 210 times. So its stock went up 5x and the PE went up 4x. Now that's what I call a bubble. We're not there yet with NVIDIA today at 26 times forward earnings.
Lee doesn't shy away from the comparisons skeptics love to make. By bringing up Cisco, he acknowledges the cautionary tale of the dot-com boom, but then carefully distinguishes today's AI cycle. NVIDIA, he argues, is operating in a fundamentally different environment. Its valuation remains tame compared to Cisco at its peak, and its dominance is grounded in physical scarcity rather than speculative hype. This distinction matters because it suggests NVIDIA still has plenty of room to expand before showing signs of a true bubble.
More importantly, look at sentiment. The AAII net bulls less bears is still negative. There's more bears than bulls at an all-time high. In fact, we've had 7 weeks now where markets have made an all-time high, and yet sentiment is negative. Yes, you can't really say we're at a top if investors are bearish at the highs.
Investor psychology is often overlooked, but Lee highlights its importance. Even with record highs, investors remain skeptical. That persistent negativity provides a cushion against the idea that markets are overextended. In other words, when enthusiasm is absent at peaks, the rally often has further to run. For AI leaders like NVIDIA, this backdrop of cautious sentiment may actually be one of the strongest arguments for sustained growth ahead.
So in a simple way, I think the three things to focus on would be Mag 7 and AI stocks, crypto, which is Bitcoin and Ethereum, and then interest rate sensitive groups like small caps and financials. But I would say, historically, the initial bigger effects tend to be monetary liquidity and the fact that cash is coming off the sidelines.
Lee boils down the winners of this new cycle into three buckets: the mega-cap AI names, crypto, and rate-sensitive sectors. Out of those, it's AI that carries the biggest weight. Unlike short-term trades driven by liquidity alone, AI represents a long-term structural story that investors will continue to buy into. NVIDIA leads this pack, but Lee's framework shows how the theme extends into every corner of the market.
The top five performers of the past week are Oracle, Tesla, Vistra, Lam Research, and Palantir. Now, they're all AI related, but Oracle, of course, surged on good earnings, and Tesla is gaining because Elon Musk made a pretty big insider buy of $1 billion.
The momentum is already visible. Oracle and Tesla, for example, have AI strategies that are driving real-world gains, whether through cloud expansion or advanced self-driving capabilities. When even legacy software companies and automakers are counted among AI leaders, it illustrates how pervasive the trend has become. For Lee, these names reinforce that AI is not confined to one niche. It's redefining entire industries.
Um, and in terms of themes, the best performing theme was energy and cybersecurity, led by Palantir and Vistra, and GE Vernova, and labor shortage, which is Oracle, Tesla, and Lam Research. Seasonality also worked. Again, Oracle was flagged as a seasonal trade, as was Palantir. But has been a grainy shot for a long time, as well as Oracle.
What makes Lee's analysis compelling is the breadth of AI's reach. It's not just chips and cloud, it's energy, cybersecurity, and even labor solutions. These ripple effects prove that AI is more than a single stock story. It's a broad secular driver reshaping market leadership. Palantir's strength in cybersecurity and Oracle's in enterprise software are reminders that AI adoption is spreading across multiple verticals, each reinforcing the long-term bull case.
And we can see in the short day and a half since the Fed announced its cuts, the leadership has come from crypto, Ethereum, and Bitcoin. That's very similar to what happened in 2024 when the Fed cut in September after an extended pause. The stocks that are most correlated to Bitcoin and Ethereum are MicroStrategy, ticker MSTR, which gained 6% on Thursday, and Ethereum's most leveraged stock is Bitmine, which is the largest holder of Ethereum in the world, and that gained 5%.
While crypto has also been a major beneficiary of Fed policy, Lee contrasts its behavior with AI. The quick surge in Bitcoin and Ethereum-related stocks highlights liquidity chasing speculative assets, but the long-term staying power, in his view, lies in AI. This distinction underlines why NVIDIA and its peers are not just momentum trades, but the backbone of the next wave of growth. Across his analysis, Tom Lee ties together monetary policy, valuations, sentiment, and sector leadership into one overarching thesis. AI will be the cornerstone of stock market performance in 2025 and beyond. Unlike past bubbles, he sees NVIDIA's dominance as grounded in real scarcity and indispensable technology. He highlights how skepticism among investors makes the rally healthier, and he expands the story to show that companies across industries are benefiting from the AI wave. From Tesla to Palantir, Oracle to Lam Research, the pattern is consistent. AI is not a fad, it's a force. For Lee, the best way to capture that force is clear. NVIDIA is the single most important stock to own for the coming years.
NVIDIA is the most scarce company in the world today because they make a chip that every AI company needs.
Now it's your turn. Do you agree with Tom Lee that NVIDIA is the definitive AI stock for 2025 and beyond? Or do you think another company will surprise us and take the crown?